Good morning. Welcome to today's webinar event. My name is Joshua and I'm going to be your presenter. It's promptly 11:30. We're going to go ahead and get started here. We're here to talk about the Adjust Asset feature in Church Windows Accounting. Before we get started on that, a few things. Click the little red arrow on the sidebar of your webinar control panel. That allows you to minimize that to get that out of the way. Or drag the control panel off to your second desktop if you've got a dual monitor setup. Again, just to get the full visual effect of the presentation. We are recording today's webinar event, as we do with all of our webinars. The video for this will be available on our website probably either later today or sometime tomorrow at the very latest. We're here together for the next 20 minutes or so, maybe less. This isn't a terribly difficult or complex topic. If you have questions, please type those into the questions portion of the webinar control panel. I will do my best to keep an eye on those, repeat the questions for everyone's benefit, and see what we can do to get those answered. Please keep the questions on topic, meaning about our Adjust Asset transaction. We want to be able to answer any questions you have, but your question that you have may be better suited by attending another webinar event or by calling our support staff at 800-533-5227. Or if it's more specific to your data, we might ask you to call in and talk to one of our technicians so we get more information about your setup. The workbook that we're using today, or the pages from the workbook we're using for today's webinar event, is from A203, Accounting 203, pages 2 and 3, the very first pages in that workbook. If you don't have the workbooks, you can purchase those online at our website. www.churchwindows.com. You can download the PDF file and print them yourself if you wish. They're very affordable. I think they're like 12 bucks each. You can buy them at even a discounted price in bundles as well. So if you bundle them together, they cost you less. Okay, so let's begin talking about our Adjust Asset, okay? So we get to the Adjust Asset transaction by going up to Transactions in the top left and across the top center to the menu called Other. Folks should be able to see that there. Let me get my highlighter out, introduce that. So we've got our option called Other right up here, okay? That's the menu we're talking about there. So when we click on Other, we get a drop-down menu, and we notice that the second one down is called Adjust Asset, parentheses, Deposit Correction, NSFs, Stock Valuation, etc. Okay? Folks, for all intent, this is a journal entry. So when we go into the transactions or when we look at reports, these Adjust Asset transactions appear as journal entry transactions. Okay? They are a journal entry. One of the accounts, however, in this is always one of our assets. Okay? So at the top side of our balance sheet, we're saying we want to make an adjustment to one of our asset accounts for any number of possible reasons. Oftentimes those just kind of pesky transactions that you're unsure how to handle. This Adjust Asset could be just the trick for that, okay? Unlike a regular standard journal entry transaction where we could affect two accounts on, say, the same side of our balance sheet, the Adjust Asset transaction is going to either increase or decrease both sides of our balance sheet equally, okay? We're raising our assets and our liabilities or funds, or we're decreasing them, okay? As the page 2 on the workbook kind of points out there, you know, bank charges the wrong amount on a check, okay? So basically there was no coding error, or somebody wrote one amount for the dollar amount and a different one for the spelled out dollar amount. We need to make an adjustment for that. Basically maybe an NSF check. We have somebody had given us a check that ended up being insufficient, and therefore the bank needs to take that out, and we need to make an adjustment for that. We need to make an adjustment for changes in our investment accounts. You know, we've had gains or losses on those investments, CDs, whatever you have, you know, accounts. We need to record those, okay? Or finally, an outstanding check needs to be voided. We don't want to go back in and reverse that on a prior period, change prior period reports. We want to just simply write it off in the current month. So again, typical things that we would use journal entries for. basically oftentimes, many times a payee isn't involved. We just need to affect our assets and our funds, income and expenses, what have you, okay? So when we choose adjust asset, it opens up our adjust asset screen here, and the very first thing it opens up, it asks us to do is to choose the asset account that we're affecting. So here it shows all of our assets. It could be our accounts receivable clients, checking accounts, savings account, petty cash, investments, fixed assets even we could choose here. Okay, any asset that falls on the top side of our balance sheet is fair game here. Okay, so once we've chosen the particular asset, so we're just going to say choose our Huntington Bank checking. Notice here, I like to point this out. Balance, we do increase or decrease. There is no debit or credit in this case. The system knows that when you choose increase or decrease, whether the effect on the asset is a debit or a credit, okay? So, you know, when we choose the increase button, we know that it's a debit to the asset. When we choose decrease, we know it's a credit side to the asset, okay? So you just have to choose, am I increasing or decreasing my asset account, okay? Then you enter the amount to adjust, the date you're wanting it to affect your books, and then your subsequent comments, okay? So I'm just going to enter $1 in there, and then you could enter comments. And then the other thing to keep in mind about here at the bottom is then we have to choose the other account that we're affecting. Could be another asset. We could, it's essentially could do the same thing as a transfer, but typically it would be on both, you know, would be affecting both sides of our balance sheet, up or down, most of the time. So notice here when I move past my assets, I'm sorry, I stand corrected. It could be that we're affecting both sides, one side of the asset side of the balance sheet only, but typically it's going to affect both sides. So once we scroll down, we could choose a vendor or a liability. We can choose, you know, notice here we're moving past those vendors. It does move into liabilities. And as I'm seeing here under questions, could it be a fund account? Absolutely. So right here, as we scroll past our liabilities, we see we could choose a fund balance account, 300. We could also choose either an income account or an expense, depending on the accounts that we're wanting to affect and how. Okay. So again, this is a journal entry. Okay. Any account essentially is fair game. Just one of the accounts involved in the transaction is going to be an asset. Okay. So by way of an example, as we move over to page 3, we have a deposit correction, okay? The bank deposited the check for, say, 50 cents less than the check was written for. We want to write that off. We want to record that. If we don't, then our bank reconciliation isn't going to reconcile. So we would choose to say that our Huntington Bank checking, we need to decrease that. We're going to put in our 50 cents here. We're going to backdate that to a prior period. You know, let's say that was, I mean, folks, this is just, you know, arbitrary dates here. This isn't real. We're going to date that back on, say, a Sunday date for January 13th, okay? Then we'll say something like bank error shorted by this amount. And then here, we would want to also then, in this case, we would want to reduce our income account that was credited for that, because that would then, our treasurer's report essentially is overstated. So we would choose our general tithes and offerings. We would put in the same amount, in this case 50 cents, and we would post. Okay? It says, do we want to print? No. Okay, now this would show up as a 50-cent withdrawal on my bank reconciliation. I would then have to clear that. That offsets my deposit that's too high by 50 cents, and those two, and the two net out to the proper deposit total for that day, okay? The second option or second example of that would be where we had an NSF check, okay? When we entered the donation in donations and transferred it over, it was included as part of our deposit. At the time we made the deposit at the bank didn't even know it was insufficient. Sometime later, the bank was notified that the check was NSF, and then it appears on our bank statement as a withdrawal, not a deposit entry. So we need to show a decrease to the income account and to the checking account. on the date that it shows as a withdrawal, okay? So the adjust asset / journal entry transaction is the perfect type of entry for this. So we would do adjust asset again. We would choose the account that the check was originally deposited to. Again, we'll assume it's our Huntington Bank checking. We're going to decrease it again, and we're going to say $65. We were assessed a $15 NSF fee. Again, we would choose the date I would choose the date in this case that the transaction, the withdrawal actually appears on my bank statement or on my bank account. Okay. So again, I would need to go into the bank account or log on to the account or look on my bank statement and see what date that shows as a withdrawal. And then I would put in here, you know, NSF check from Jim Jones, check number 2345 plus NSF fee, say. And down here, again, I would choose the account. We're going to choose our building fund income account, building fund contributions. The amount of the original check was $50, not 500, Josh, 50. Then I notice here I would tab over or click the plus sign when the account moves down. I can then choose a bank fees expense account and put in my $15 bank fee. And again, post. So that should reconcile perfectly, okay? Again, it shows up as now a $65 withdrawal on August 28th when maybe my original deposit was on, you know, August 24th. So they don't adjust the original deposit. That is typically left as it is. This then shows up as a withdrawal sometime later, and it still should reconcile perfectly, okay? So again, we would post that. Finally, a stock valuation, okay, a change in value of our investments. So again, there's no vendor, no payee involved here. We could, but there isn't really a need for one. So adjust asset allows us to raise or decrease our investment asset and record it on our treasurer's report or as a change to a fund or whatever we need to do. So here we would do our Lynn Schwab investments. Again, we're going to choose increase, and we would put in the amount that we're increasing it by. You know, I think the amount there shows $875.22. We would enter the date. You know, let's say we'll backdate that to June. We'll say, you know, it was a second quarter increase. You know, second quarter investment gain. Now here, under our account, again, folks, this is a dual entry fund accounting system, so we have to choose two accounts. So again, I could go down here and I could choose, you know, gain and loss on investments, or I could do Lynn Schwab investment income. We're going to choose gain loss on investment, and I would do the same thing, put in the same amount, $875.22. But I do want to point out again that if I chose to not do the income account, I could click in here and I could scroll up and choose a fund if I don't want to reflect that on my treasurer's report as income for the year, okay? If I had an investment fund, I could post a credit to that as opposed to a credit to the income. The choice is up to you and how you want to show these on your Church Windows accounting reports, okay? In our particular situation, we're wanting to see it on our treasurer's report as gain, loss on investments. Again, it's your choice. Okay? These are your reports, your books, your treasurer's report, your balance sheet. You decide how you want it to report. Okay? Maybe if it is I'm only wanting to reflect a change in value, maybe I don't want to affect an income account. Maybe I do want to post it directly to the fund. But again, it's your choice. Similarly, we would click post and print if indeed that's how we chose to deal with that. Okay? So, again, to recap, this is simply a journal entry where one of the accounts involved in the process is an asset. Could be another asset, okay? But one of the accounts in the adjust asset transaction is always going to be an asset, okay? All right, so that is our topic for the day today.